Well, if you would have told me 3 or 4 years ago, oh yeah, you could get a short-term, multi-year guaranteed annuity, what we call a MIGA, for 5.5%, I'd have said no way, because they were 1%. But currently, in 2023, there are. So I'm looking at protecting more of my money in something like that. But Anthony, I'll ask you a question. I know the answer, but do you own annuities? And if so, why? Why do you own annuities?
Yeah, the only problem I had is when I started in this business, I was too young to get the products I wanted to get.
That's it. Yeah.
Probably starting at about age 48. I'm 54 right now. I started buying annuities. I have 9 annuities right now, and I plan on buying 2 more here very shortly. I believe that, having an income floor, I mean, this is a really critical concept for your listeners to understand.
Yes.
I call it living with impunity when it comes to your finances. If you have all the income you need on a guaranteed lifetime basis, we also call it mailbox money. In other words, if something happens to me, all my wife has to do is go to the mailbox. She doesn't have to figure it out. She doesn't have to have my investment knowledge or know how to run that rental property or any of that kind of stuff.
That's right.
Day one, after I'm gone home to see the Lord, she can walk to the mailbox and get her money. In fact, these days, she doesn't even have to walk to her mailbox, right? Just gets
direct deposit
right into her account.
That's right.
And any of the other complexities that we have in our lives, she doesn't have to worry about those right away. I mean, she does, all the bills are on auto pay because the money comes in every month. And so that is what I have set up for myself and my wife, where we will always have the income that we need, at least the bare minimum, right? Cover expenses plus a couple vacations now and then.
Yeah.
And then the impunity part of that is, what do you do with the rest of the money?
Mm-hmm.
Right?
Right.
If you insure your income, then the rest of the money, you can maybe take on some risk and not have to worry about it, right?
Gives you freedom.
When the market, you can be patient. You can sit there with some cash on the side, wait for the market to go down. If the market crashes on you, it doesn't cause anxiety because your income is taken care of.
Very good.
And so that's what I've done with my own personal finances. And that's what I've always preached to our clients and the partners that we work with.
Well, let me ask you this, because I get asked this all the time. Brad, I took out my first annuity at age 37. I'm 51 now. So they always say, why do you own 6? And you said you own 9. I know world-renowned economist Tom Hegna, a good friend of ours, owns 11. Dr. David Babel owned 14. Mm-hmm. Why would you own more than one? Can't you just get one and it's what you need? Explain that a little bit for our listeners.
Well, this is where you need help. If you're listening to this right now, an annuity is a product. A product is not a plan, right? So
that's good. That's right.
You need to have someone analyze your situation, your timeline, and then we have this nasty little thing called inflation. So there's going to be a strategy that Brad is going to do for you called laddering and inflation hedging, so that different income can turn on at different times. And different products serve different purposes. Some of them are inflation hedged. Some of them are geared towards the largest guaranteed income amount. Some of them might just be growth. We call it lazy money. It's money that you don't need for your income, but you still want to grow it and protect it. I mean, we all want to be good stewards of our money, even if it isn't something that we're going to use during our lifetime. And I've always said that money has, and we talk about this on our radio show, money has 2 purposes, life and death, mm-hmm. right? You're either going to use it while you're alive or you're going to use it while you're dead. And different products tailor to those different things specifically. And then some products are more geared towards long-term care benefits than others. So you really need to have a comprehensive approach. And don't try and figure this out on your own. You will not be able to do it.
Yeah.
I mean, Brad and I have been doing this a long time, and it's a daily chore, a constant chore of learning what's available and how to implement it. So you really need that help. And then maybe in your particular situation, it will be just one product, and that makes sense.
Yeah.
But for some of you, it might be a lot more, and that's where you need help. And that's why I have it, because my income is laddered out and inflation hedged, and some of that money's just for my spouse if something happens to me. Some of it's for me because, I like to have income too.
That's right.
Some of it's for long-term care. Some of it's for death benefit. So
but the key is on all those annuities that you've laddered, and same thing for me, no matter what the purpose is, whether it's income, maybe starting at age 60, then I'm going to turn another one on at 62 and then one at 65. But they're all safe. We don't have to worry about, will that be there in the future? We've secured that and it's insured. We know that plan is foolproof no matter what's going on in the economy.